Hello and welcome to the latest episode of Legal Bites, the official podcast of Cummings and Cummings Law, where we focus on helping businesses and their owners re-domesticate out of volatile legal and tax environments to more predictable pro-entrepreneurship, pro-growth states. Today, we are reviewing a recent report by Zero Hedge entitled Here's Where Wealth is Moving in America, referring, of course, to the ongoing mass migration of businesses and their owners to states that value rather than penalize their business. But first, a brief introduction. My name is Chad Cummings, and I am an attorney and a certified public accountant, serving clients in matters of business, tax, and commercial law. I am Chief Executive Officer of the multi-state, multi-attorney law firm Cummings and Cummings Law. And in addition to my day job, I also teach business and tax law at the university level. I hold 4 degrees, including 2 law degrees, as well as a bachelor's degree in accounting and a master's degree in taxation, in addition to 11 professional licenses and certifications covering accounting, tax, audit, and of course, the law. My firm website is www.cummings.law. The Federal Internal Revenue Service, which everybody loves, I'm sure, does not speculate. It counts, it quantifies. And the count for 2023, which by the way is the most recent year for which we have good data, shows that Florida, for example, gained 21 billion with a B dollars in adjusted gross income from interstate moves. That is more than the next 5 states combined. Texas gained $6 billion. North Carolina gained $4 billion, as did South Carolina. Arizona gained $3 billion. Tennessee gained $3 billion. And those 5 states together, when you total them up, that's still less than what Florida alone gained. Between 2019 and 2023, net income flows into the Sunshine State from interstate moves totaled a whopping 137 billion with the B dollars. That figure exceeds the gross domestic product of Hawaii. The people moving to Florida are not retirees on fixed incomes, although there's certainly a few of them, or I should say more than a few. Rather, in this situation, Florida's incoming residents had an annual average income of $122,530. Remember, this is IRS data. I'm not making it up. You can see it for yourself. The state is not just gaining population, it is gaining high income taxpayers who generate sales tax revenue, property tax revenue, and economic activity at a rate that exceeds the population they replaced. Now, California lost, so this is a negative figure, lost $12 billion in adjusted gross income in 2023 alone. That is the largest outflow of any state. From 2019 to 2023, California's cumulative outflow totaled 91 billion with a B dollars. That is a blow from which that state will not recover, I am sorry to say. New York lost 10 billion with the B dollars in 2023. Illinois lost 6 billion. Massachusetts lost 4 billion. These are not small states losing a few taxpayers. These are some of the largest economies in the country, indeed in the world, losing the income that funds their governments and infrastructure and public services. The data come from IRS tax filings analyzed by Realtor.com and visualized by Visual Capitalist, as reported by Zero Hedge. They measure adjusted gross income reported by taxpayers who changed their filing address from one state to another. When a taxpayer earning $500,000 per year moves from California to Florida, California loses $500,000 in taxable income permanently. Florida gains a resident who spends, invests, and generates economic activity without ever receiving a state income tax bill from Tallahassee. The pattern is not random, and yes, there is a pattern. The states gaining wealth are the states with no income tax or low income tax. That would include, for example, Florida and Texas, which have no income tax, as well as Tennessee and Nevada also impose no individual income tax. North Carolina and South Carolina do impose individual income tax at the state level, but have enacted rate reductions and are on downward trajectories. The states losing wealth are the states with the highest income tax rates and the highest costs of living and doing business. California's top rate is 13.3%. Actually, when you do the math correctly, it's even higher at 14.4%. New York's combined state and city rate exceeds 14%. Illinois' top rate is 4.95%, which doesn't sound too bad until you consider the proposed surtax, which would increase to 8%. Massachusetts enacted a 4% surtax on income above $1 million, bringing its top rate to 9%. The wealth migration I have seen firsthand at my law firm is not a temporary dislocation. It is a 4-year plus trend, with each year larger than the last. The states losing income are responding by proposing new taxes on the people who remain behind. They will be left holding the bag. California, for example, has Proposition 40, which is a wealth tax, on the November ballot. Minnesota is considering a similar tax. Illinois is pursuing a constitutional amendment to raise income taxes. New York enacted a pied-à-terre tax on high-value second homes. Each new tax gives the next cohort of high-income residents a reason to vacate, and each departure further reduces the tax base that the new tax was designed to reach. I would call that a negative feedback loop. For business owners operating pass-through entities in the states losing wealth, the IRS migration data confirm what the anecdotal evidence has suggested for quite some time. The income is leaving, the people generating it are leaving, and the tax environment that caused them to leave is getting worse, not better. Now, with this background in mind, redomestication is the lesser known legal process of transferring a company's state of domicile to a new state without dissolving it, without creating a new entity, and without triggering federal income tax consequences, but only when performed with the strict formalities required under the Federal Internal Revenue Code, applicable Treasury regulations, and the statutory frameworks of both the destination and departing states. When executed by a competent professional, and that's a big caveat, the company retains its existing federal employer identification number, contracts, credit history, and bank accounts. I have successfully completed redomestications from all 50 states, yes, including California, and for limited liability companies, partnerships, subchapter S entities, and subchapter C corporations. Now, let's be clear. Foreign entity registration, which is often suggested by some CPAs and even some attorneys, is not the same thing as redomestication, because foreign entity registration, also referred to as foreign qualification among myriad other confusing and sometimes misleading terms, does not change the company's domicile. Rather, it does the opposite by keeping the entity in the former state that you are trying to escape indefinitely and merely adding another layer of compliance and tax burdens in the new destination state. Meanwhile, a traditional merger, which is also not the same thing as redomestication, creates a new distinct entity in the destination state, may and often does require the issuance of a new federal employer identification number, and can trigger serious tax consequences. Finally, dissolution. Dissolution should not enter the conversation at all, because dissolution terminates the company. Dissolution is a going out of business maneuver, not a relocation mechanism. Dissolution is often a taxable event, and when performed inadvisedly, can expose the owners of the company to unlimited personal, joint, and several liability for the company's liabilities, known and unknown. This is because the so-called veil of protection, referring to liability protection afforded by the use of an LLC or a corporation, no longer exists because the company's been dissolved. So if you have a so-called professional suggesting dissolution as a relocation option, I urge you to seek better advice. Redomestication, when paired with a change of personal residency, and that is an important and, a reduction or outright cessation of business operations in that former state, can reduce or even eliminate state tax exposure there for the entity and its owners. Now, don't take my word for it, ask your CPA. Now is the time to consider acting before these state legislatures consider changes to their laws to hinder or even eliminate the option of redomestication. If you have questions regarding potentially redomesticating your existing LLC or corporation, please use the link in the description for more information on this process and to schedule time for you and I to speak one-on-one about your specific scenario. Again, my name is Chad Cummings, and I hope that you found this information helpful. As always, the information in this presentation is necessarily general in nature and is not legal or tax advice, nor should it be construed as such, because that advice definitionally must be specific to a particular set of facts and circumstances. Should you have any questions regarding this information or the content of any of my many earlier presentations, and there's quite a few on these topics, please visit my firm website at www.cummings.law, not .com, but .law to schedule time for a consultation. I look forward to that opportunity to speak and perhaps even work with you very soon.